Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is earnings per share, diluted earnings per share. We have two earnings per share, basic and diluted. Basic earnings per share is not our topic now, but we have a video about basic earnings per share, and the link is in our video description. And by the way, subscribe to our channel. It's very important to us. Like this video, like our Facebook page, Accounting Hub by Dr. Scarpy. So, what is earnings per share? A way of summarizing the performance of business enterprises in a single number. Comparability of earnings per share number is maximizing by minimizing the inconsistencies in their calculation from one company to the next. And what is the difference between basic and diluted earnings per share? So everything that relates to basic, it also relates to diluted. However, diluted, we have additional topics, potential common share, securities that are not common stock but might become common stock through their exercise or conversion. Complex capital structure when any potential common shares are outstanding. Examples of potential common shares: convertible bonds, convertible preferred stocks, stock option, contingently issued securities. And a firm with a compact capital structure reports two EPS calculations, the basic and diluted. Basic ignores the dilutive effects of such securities, and diluted incorporates it. So let's go to our Excel file. And all our Excel files are free, and the link to download it is in our video description. So let's start with the first scenario. Net income 225 million, income tax rate 25, we will use it. Common stocks 40 million stocks. Basic and diluted earnings per share will be the same. And by the way, guys, we have the basic earnings per share here too. So we use the same Excel file for both videos. Second scenario, incentive stock options. Executive stock granted in 2016, so 4 years ago, exercisable after 2020, where we are now, 20 million common shares. Exercise price per share, $15. Average market price, 22. So let's start it with our earnings per share. Here, that is 225. And let's fix it because we will be copying and pasting the formula. Divided to 40, 563. And now what changes on this diluted EPS here? We will add these common shares. However, we will exclude the uh, the compensation. So we will be excluding what we give them. Okay, so how do we do that? So in formula, however, plus the common shares, let's fix it, less common shares divided by the exercise price times the average price. Oops, oops, wrong because I did the formula. It is times average price divided by exercise price times the greatest number divided by or times the lowest number uh, and divided by the greatest number. So here for 85. For 85 here. Open paste this formula here. And now, what do we have? Convertible bonds. And the convertible bonds, we are converting these $200,000 bonds, 7%, into 10 million common shares. So, first of all, what do we have here? Uh, we will be, whoops, we will be adding these new shares. So we are adding these new shares here. And what else? We will be adding these interest expense that we will not expense it anymore. So we will be adding this interest expense, okay? However, we are excluding the income tax on this expense because we are adding the net expense. So we are adding the expense and we are excluding the income tax. And the income tax is 25. So now we have 418. That is our number 418. Okay, so we need to add the interest expense. We will not expense it anymore because we are considering it the number of shares. And we are uh, we are subtracting here our income tax. And here we have some preferred stocks convertible. So this net income here, we already it is. We need to we took off these preferred stocks. We will add it again. So we will be adding this one here. Okay, so this is our preferred stocks dividends. 15 million shares times 6% times $8 par. So we will be copying and pasting here. So we will be adding these preferred stocks here. And we will be adding here our number of common shares. So it will be 370, 371. We are adding the uh, stock dividends that we reduced in the past, and we are adding the number of common shares. So guys, diluted earnings per share is one of the hardest topic of equities. It is very, very hard topic, very hard to find it, especially the diluted earnings per share. So if you need, just watch our video anytime and how many times you want. Okay, guys, so thank you so much. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.